And welcome everyone back to another Prospero.ai stock market live stream. I'm hoping this email I just sent out on Substack went through to everybody. Substack has been giving us some issues recently. They had a problem last night. One of our posts didn't get out, but I see there's at least one person in here. Let's see. Oh, for some reason, Substack is just not working, not sending out emails. Very light viewer base in here. We're at an unusual time today, Tuesday, 11 a.m. Usually Monday and Wednesdays, but George is on the move this week, and he is going to be joining us in a second and sharing some more information about where he is and what he's doing. But he has an exciting week ahead of him. Hello, I'm seeing some viewers joining. We're going to be getting into our stock market topics. But as we're waiting for George to get in here, let me just preview them for you and we'll get underway. So, the biggest event in the market this week is going to be Wednesday after the market closes. NVIDIA reports earnings. So, we'll preview how the stock looks in Prospero, and then we'll talk about some of the implications that can happen throughout the market from those earnings. We got Walmart earnings today, this morning, and they were good. And we're going to talk about how their sales looked over the holiday season. And they actually bought a small company, and we're going to talk about what that means for them. It's called Vizio. It's a TV maker. I see George has joined us, but the webcam is not seem to be working, so we'll get that figured
Can you
out.
hear me? We're trying something new as I finish this setup, which of course is always difficult on these things. Um, as I finish the setup, I'm just going to join via sound. You can hear me, right?
Yep, we can hear you.
So you will get a real George in a second. There's some other things I have to send out on like retweets and everything. These admin duties are getting larger and larger as these things start. Um, but I'm here, and you should finish the topics, and I'll be ready to jump right in.
Yep. I'll keep running through them, and excited to hear about uh, the events that you have going on this week, and we'll tell everybody about that. But so like I was saying, the Walmart earnings, how they came in for the holiday season. They bought or they're acquiring a company called Vizio. We'll get into all of it. There was a major acquisition also in the credit card space and the financial industry. Capital One is buying Discover Financial. I think it's the biggest acquisition that's happened this year so far, and we saw the concept of this intrigues me. Oh, thank you, JR. The concept of this intrigues me. What, a stock market live stream or just Prospero.ai signals? Comment again. I'd love to hear it. Um, but we'll talk about how the Capital One deal affected, companies like Visa and Mastercard, and what that means for the financial space. Next, this is a really interesting story that I can't wait to get George's opinion on. So, the Magnificent Seven stocks profits are now bigger than every country in the world when combined, except for two. Guess right now in the comments which countries those are. If you guess right, I'll tell you. If not, you're going to have to wait until we get to that topic later on. But does this concentration concern us? Is it something that can go on forever? We'll get into all of it. And then we're going to spin that into a conversation about Warren Buffett and his position with Apple, which has ballooned to be almost half of his entire portfolio. And what would that mean? Yes, Ryan, that's a good guess. China is one of them. I think that was the easier of the two. There's one other one. Try to guess that. But that is one of them. You're right. Um, where was I? Oh, yes, Warren Buffett's Apple position. And if he were to trim that, what would that mean for Apple, tech stocks, confidence of investors in not only Apple, but the tech industry in general? And then last but not least, before we get into the model portfolio, we're going to talk about Reddit, which signed a deal to sell their customer user data, which, I don't know if it's the best look for Reddit that, they're just monetizing their customers in that way. But looks like they're trying to maximize their revenue before going public in March, which is what's looking likely. And we'll get into all the details of that deal. And it was surprising, honestly, how small it was to me, but we'll get into the details later. Um, and that'll be it for today. Sorry we're at a different time than usual. We were going to go live yesterday, but George, like I said before, is traveling. But we squeezed this one in today. Um, how you
Tell them
doing,
what I.
George?
You can tell them what I.
I don't know what's. I heard the first couple words you said, George, but then your mic kind of went out. Ryan Semmelmeyer. I was gonna say it did feel like a bit of a trick question. Is it a surprise country like India? No, it is not India, but you're in around the right parts of the world. Um, India would probably be soon, though. They seem to be growing pretty quickly, but it is not India. I think George was saying he wants me to tell you guys what he's doing this week. He is out
Yeah.
in California.
See how you describe it.
He's out in California. He's going to be speaking at UC Berkeley, and he's giving a talk about the future of the financial industry intertwining with technology and how Prospero, is pushing the finance slash tech space forward. And I'm going to find the LinkedIn thing right now and post it in the comments so you guys can see George's speech this week. But it's very exciting, and I I believe from what we were talking about before, there's 2-day event, I believe.
Yeah, so I'm giving about a speech, like a change maker speech for about 300. Like it's like a special series at Berkeley tomorrow, and then like another, I think, 170 the day after, and then maybe just only 100 like back to back after that. Um, so yeah, it's a pretty exciting time. And like yeah, I think to expand on what you said, a lot of the speech is basically about um how I think leaders should be more, one of the things that actually got me this gig um was that I talked about how like Steve Jobs was a helpful influence on me in terms of just like following your own creative spark. And I did mean that. Sorry, I'm multitasking. But as I thought about it more and like the kind of like leader that I think more people should be, and like what I think as I get a platform, I want to say more is how I think what products do should be just as important as like someone being creative and making like products that influence the world a lot. Because like if you think about it, iPhones are made in sweatshops essentially, and the other part of that is that they don't really do good things for the world. And it's not really Steve Jobs' fault that they don't do good things in the world, that basically like they bring people out of their important relationships and into a relationship with their phone. But the other part of it is definitely sad, where it's just like that's the facts of what happens, and these phones are not necessarily good relationships in our lives. And it's I think the leadership that I would like to see more now is basically the kinds of things that are just like, okay, it's not just like, are you creative? Can you create something that's impactful? Like, can you create something that's impactful in a good way? Um, and I think that that's like a super important thing in like, drawing attention. And I think it has to be like one of the things that I think is important that I'm going to talk about. And this speech will go online, it's getting filmed tomorrow. One of the things that I talk about on that front is just that um, I think that people need to start demanding that of their leaders more, but also demanding it in ways like I think one of the things that I talk about kind of like personally in my career that I always had great ideas and I was always passionate about them and I kind of always wanted to do the right thing and actually got me fired from my last full-time job trying to like help borrowers by building a more accurate loan modification algorithm. So I think a lot of that is like super important to me already. And, more of what I want to see other people do and prioritize. And I think if we start demanding that of our leaders, they'll kind of be forced. And when I say demanding, I think there's this fun like carrot and stick analogy that I've been playing with. And it's just basically like, um, I also think kind of the mistake of millennials, and by the way, or like anyone below, is like I would be pissed off too, by the way, if I was in these generations and I would just be lefting like like a shorter and shorter end of the stick as time goes on. But I like part of like I think what I have learned is that I think that people like actually need to be better about their approach. And I think people aren't wrong when they say they like want a better world, but when they just kind of like complain and are frustrated about it, it doesn't go very well. All right. Now we're finally ready for my market update. Um, thank
George,
you all.
your webcam isn't working. Can we try to get that on somehow?
It's about to be working. Here we go.
Ah, there we go.
I didn't even spend a lot of time making my bed nicely. This is how rushed I was to get everything set up. We got this. We got the phone for the market update. Here we go, because it is a very interesting day. And I think obviously I was, even though the net option sentiment numbers were just in a slight decline, I obviously have been a lot more defensive, suggest a higher hedge, all of that stuff going into today, because not only would I say directionally I saw this coming, and I dropped SMCI and Tesla, which was great. Obviously, those are doing poorly. But I think, and I already got some feedback about this. I think the reasons for these drops are just as important as the actual drops. And, I'm getting a lot more clarity on how to describe kind of some of the sector based approaches that we've made. For those that are newer to us, we're above the market, 400%, close to 400% this year. So I would say where a lot of people kind of have criticized us and say, like, and I still see it online. They say what we're doing is fake. They say what we're doing is like, nobody could beat the market. But it's just like, okay, well, you believe hedge funds could beat the market? I worked at my first hedge fund when I was 17. I've been building an AI platform for 13 years, which is more than most hedge funds have. And like, just because we want to give these signals away for free and people are even so just like accustomed to greed that they can't even like grok that we're trying to just be nice and help people, that's just like a weird and funny thing to witness. But yeah, we're definitely seeing an even further, to be more tangible, we're definitely seeing an even further softening of SPY net option sentiment, and we were already worried about that trend. And so yeah, that is something to watch for. I'll get an updated number here on that in particular. But when I saw it, it was 39, and I would actually expect it to be lower without even having looked based on everything that we're seeing. No, it's up to 43. So we might see the market curving back up as a result of that. Ooh, but QQQ net option sentiment is at 38. That's as low as I've seen it for a while, which is one of the reasons we put on a new tech short this morning. And we might end up going more extreme on the tech shorts at the end of this. For those that haven't watched this, what we tend to do at the beginning of our live streams is we set all this up, talk about some of the important market stories, and then at the end I actually show you how I update my model portfolio, which you'll actually get a feel for both how our signals work, and then also what we do with them, how we layer in some kind of value investing principles, macro investing principles to make our decisions. And like, yeah, things are definitely going to go more bearish. How bearish and how we allocate sectors is something that I'm going to even look at the end of this, because I want to check the new data for today.
Yeah, so I hope we don't get a double whammy forming where we get, these more negative signals heading into, the biggest event of the week, Nvidia earnings after market on Wednesday. And can we look at Nvidia and Prospero and kind of give a little preview of what the stock is looking like? And then talk about, if Nvidia has bad earnings or good earnings, how much that can impact the market and other stocks that are in the AI semiconductor industries.
We definitely will do that. Um, I think that there are we doing that now? Is that
Yeah,
the goal?
I think we could start right there because I think it's these negative signals we're seeing in the QQQ, especially where it's dipping way below the SPY now. Maybe that could be a negative foreshadowing for Nvidia. Um, Hopefully not, because if those two events combine this week, I don't think it'll be too good for
How do
bulls.
you want to do? Do you want me to just talk over do you want me to just talk over the app? Because normally we can't pull it up in here. Do you want me to just tell you what I'm seeing?
Yeah, yeah, that'll work.
Okay, so let's take a look. And for those that don't know, I think I'll just actually stream through this really quickly. Like what I would say is a really great way to look through the difference of net option sentiment and and uh kind of upside breakout, downside breakout are long-term signals. So if you go into Nvidia right now, you basically see by far the highest profitability plus growth company. And we guide to, if you want to make a long-term investment, we guide to this number being above 120 to get like um, a nice like kind of safety floor. So that's what we guide to. Nvidia is obviously at 169, which is actually way higher than anything else. I think SMCI is the next highest. It's something like, maybe 160 something. SMCI did have a really solid projection. Yeah, SMCI is also at 169. So they're right there, but nothing else is really even close on the profitability plus growth. But if you look at NVIDIA, you have a 65 upside breakout, right? And I think that's what a lot of people don't understand about NVIDIA, all these like NVIDIA pumpers. And it's a really simple concept why you would have a 65 upside breakout for such a high profitability and growth stock, right? And it goes something like this. Is not clarity for institutions betting on Nvidia, right? You could look at that something like something of a probability, right, for our system, basically being like, yeah, our system is about given the upside and the number of people betting above where the stock is trading in the long-term options markets, institutions, like we're basically looking at something of a 65% confidence interval of a good gain in the next year relative to other stocks. I think that's the best way to look at what that 65 upside breakout means. So why would that actually occur? Well, it would actually occur because if you look at their last quarter, they posted a 206% gain, which is absolutely insane. To properly contextualize that Amazon's best quarter in the last 15 years was a 59% year over year gain in revenues. So that right there is a bit how you see the risk profile because Nvidia actually on that, like it's one of the best quarters I've ever seen. That stock went down the next day and it went down because they gave concerning guidance on China, right? So that is all of these Nvidia pumpers don't understand that, yeah, when the stock goes up, they can make money, right? But it doesn't mean they weren't taking on way more risk than they understood, especially when we see data like, we don't know what Nvidia's, long. We don't know what he's going to get up and say. He could get up and say he's really concerned about China. And they could post a 300% gain, but he gives concerning guidance on China and the stock could go down on a 300% gain. That's why if anyone tells you that they have a certainty in Nvidia, they're just like overconfident and probably trying to get you to pump the stock with them. The other side, including hedge funds that do this all the time, but it disappoints me when retail, especially the same retail that complain about hedge funds, pump stocks themselves. There's nothing that annoys me in this world more than hypocrisy. You see that all the time. Um, so basically, to continue, I'll answer that in a second, luxury, on the time frames because we do get that a lot. Um, so what I'm basically saying here is like all the institutions they know how high profitability and growth in Nvidia is, and even then, relative to other stocks, there's like a 65% confidence interval in that. And the nice thing about our upside breakout is um, it layers in analyst ratings and price targets and price momentum factors, in addition to those institutional options pricing algorithms that run net option sentiment exclusively, right? And net option sentiment is going to be short expirations of options, so less than 6 months. And that actually, on the long term side, we separate out long term demand for calls on upside and long term demand for puts on downside. But in net option sentiment and why it works so well, that's all like smacked all right together and netted out. So you're basically getting an easy net number, and that's why so many people can use net option sentiment, and why we call it our hero metric. But anyway, right? So you see that 65 in NVIDIA. Now you can go in and look at Meta, right? And Meta has, not as high profitability and growth, 87 profitability, 62 growth, but it's got that 100 upside breakout and 20 downside relative to Nvidia's 65/30. So a way different thing. And why is that? Well, one of the reasons, if you compare their like 2024 PEs, we can get a live look. Meta PE is we can look at it, and it is, the 2023 actual is 32, 2024 is 24, right? And then look at Nvidia, right? Nvidia, the actual is 297 and the 2024 is 65, right? So what you're actually getting on 2024 earnings is just a 3 times better value, roughly, for Meta. So that's why you see that certainty. Meta is not growing as much as Nvidia. It is the third highest growth stock in the Magnificent Seven. But while it's not growing like Nvidia, you're getting a 3x discount on that growth. And then you start to have dividends, stock buybacks. So that's how you get 100 confidence interval. And Meta's been at 100 in our signals in upside for the last, since February 16th. So since it was trading at 170, it's one of our biggest wins. It's a great case study if you want to post that case study for newer people to Prospero, Stephen. But, you know, that's kind of a really good example of just how well the Prospero signals work. Because basically, for that to happen, institutions need to keep their live bets. Our metrics update every 3 minutes. They have to keep these live bets on. Analysts have to keep moving the price target of Meta up. And in that case study, you can see. And price momentum factors have to continue. So all of that has to continue to stay up for Meta to stay at 100. And that is the really important thing about looking at like Prospero signals, I would say. Because even if, it's a hard calculation for you to look at these, say, PE ratios and say, like, well, I don't know what is a better value, Nvidia or Meta. Like, we try to make it a little easier for you and say that institutions are way more confident in betting above where the stock is trading on Meta than they are on Nvidia. So for bang for your buck, risk reward, why I don't know why you'd own Nvidia over Meta with that kind of risk profile. And basically with someone being able to get up in earnings and then just basically saying like, well, we're more worried about China and what I'm calling like the AI chip wars, which are absolutely real. And these countries are hitting each other back. The extent that it's just political theater or actually something, a real tangible impact on Nvidia's business, that's too hard to odds make for me and anyone else, by the way, unless they have inside information, which I doubt a lot of our, watchers have. But, I barely get good information on some of this stuff, and I have a lot of contacts in the hedge fund world. But that's why we've invented our signals, right? Because I don't really need the contacts. I can tell you that institutions are not very certain in the long-term options markets on Nvidia. And that's just an easy kind of way to describe it. I'll answer the long term, short term. I think we are going to get more into SMCI, Lamb research after this, right? Right, Stephen. We'll go into that, but I'll get this. We like to just jump in on the questions. So the short term time frame, and I think this is very important. Like we always like to give the disclaimer that short term investing is really an advanced tactic. If you're not making a lot of money on your longer term investments, even a week, a month, it's unadvisable. I would call it. Unless you're just also paper trading or playing around with small amounts of money, that's fine to learn. Unadvisable to put any reasonable amount of money until you've really started to have a high hit rate and a good process, right? Someone showed me their like Nvidia trades the last week yesterday and been like, oh, you should shut up. And it's just like, I've been doing this for 20 years. Your few Nvidia trades does not impress me. And I've seen so many people make trades like this and then 4 days later lose that and 3x that money. And you know what the annoying thing is? When that happens, nobody talks about that. Everybody always wants to throw their wins in your face. And nobody talks about their losses, even though 90% of people lose on options. So that just shows you how much bullshit there is out there, because 90% of people lose on options, but you only seem to be seeing people post option wins. That math doesn't add up. It's kind of like when you look at male and female, like when they talk about how many sexual partners they've had, and even people that, like, by the way, identify as like heterosexual, there's like a huge skew in basically the raw number when you add up like how many males, like, say they have like, heterosexual partners, and then like female, same thing in terms of their like total numbers. So it's the same kind of thing. It's reporting It's reporting problems and people's ability to be honest about their wins and losses. Um, but yes, the short-term time frame is very difficult, right? Because it could be live net option sentiment. It could go from 80 to 20 in 3 minutes, right? And I'm not going to tell you to keep holding if a stock goes from 80 to 20 in net option sentiment. I've seen it happen a bunch of times, and I'm going to get the hell out of it, right? But the other part of that is that, like, it's good to have conviction. And why that's why we recommend, especially if you don't have your own comfort level with short-term trading, like that's why we rarely recommend having a long-term view, having things like a profitability plus growth of 120 or more, upside breakout, at least 20 or 30 more than downside breakout. If you have at least two of those things, and by the way, NVIDIA is in that category, right? You're doing enough to monitor your risk that I don't think it'll be a big tragedy if you hold that for a year. Would I rather have you hold something like Meta that's 80 more upside than downside? Yeah, that's going to be a lot safer. And like, there's no guarantee you're not facing like a 30% loss on NVIDIA or Meta. But I would say the probability of a 30% loss on Meta is way lower than NVIDIA, just due to the one story that we're talking about there. So short term, I generally don't trade anything less than a day. Like, and that's just a personal philosophy where I'm just like, look, if I'm not willing to like take a look at some volatility around like a trade, especially even if it's in a model portfolio, like then I probably didn't have enough conviction in it in the first place. But I would say on the other side, um, I would say on the other side, I definitely, I definitely have to. Sorry, I gotta move this so my mouse can actually have a decent mouse pad. Um, a month, I would say, is like kind of how I look on the shorter term side, like how I look to hold, and especially like when I trade options. And by the way, like I've stopped my trading for securities law reasons. I don't want any like funniness in terms of how long I own it versus what I'm recommending. It's just easy that way. But when I used to trade options, my recommended option strategy is that you don't trade options unless you have like years of wins. But if you're going to, my prescribed risk reward and how I do it is I tend to own options 60 to 120 days to expiration. If I'm looking for like kind of like a short term net option sentiment based game, and I'll hold it. I won't let that days get any lower than 60. I'll exit before it gets to 60, and I generally don't hold through earnings unless I see kind of like what I would consider reasonable implied volatilities relative to what I think the move is. And if there's reasonable applied like implied volatility, um, I'll take a look. One of the things that I actually do sometimes when I have more capital on hand right now, like I'm obviously like especially not really doing that, but especially when I did more kind of institutional trading, and if this is available to you, I did like selling puts at high IV and then also using some of that um, to either buy longer term calls if I wanted to be on the riskier long side, or buy longer or shorter term puts, depending on like what my exact view of it was. And if you're selling those puts, that's better. But again, we're getting into a more advanced tactic, and I would just not recommend. Like, this is the kind of thing that like I tell people, because if you want to play around paper trading, that kind of thing, learn, take your lumps on small amounts of money, that's great. But please don't put any kind of real money into this unless you have like just easy numbers, 5 years or more of trading, investing experience. You just don't know what you don't know, and I don't want to really be responsible for anybody losing money. Um, all right, I think that's a good NVIDIA answer, Stephen. Are we sufficient?
Yeah, but just before we move on, I just want to highlight, the move that you made of dropping SMCI and adding LRCX, kind of based off the NVIDIA earnings, right?
That's an 8% difference today. No, 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 no. It's not about that at all. That's that's an added thing, right? Um, so um, you and every hedge fund, spiky dude, would like to get access to our API. Uh, I'll tell you, unfortunately, the same thing I tell any of them. No fucking way. Like I I have like, and you can post our alpha strategy like right here. Like we are very open about like our materials, like, but I have worked on these intentionally in a silo for 13 years. So nobody gets access to that. And that's how we can have a situation where, by the way, I didn't update the positions, so we will be in much better shape. But like, by the way, like I have done this for a very long time, and my team has to make sure that this alpha isn't traded into the market. So if I sold you API access, hedge funds would buy it. And then honestly, I'm an idiot, right? Because like I'm not starting a hedge fund to make a boatload of money myself to not trade it into the market. So I'd basically be taking way less money than that to have hedge funds traded into the market without me profiting. So it wouldn't be very smart on my end, to say the least. We try to, and I'm about to post something that will let you guys kind of know how we think about this in more detail, which is super important. Uh, so you guys can nav, and like we're very open about our materials. Um, so this is, well, mm, here we go. This is our stream. So basically, if you click into this, you can nav to and I think I can just show this, right? Yeah, I don't know if you can copy this when I do that, but that's cool. Um it's annoying. They make this very annoying. Anyway, if you nav to like alpha, you can see our alpha, and then there's also this like, if it's so good, why don't you sell it thing. That'll tell you why we have this alpha strategy, why it's working, how long we've thought about it. But yeah, like we want to be able to get you guys access to it and for it to work on an ongoing basis. And for that to happen, we have to be very careful with how the signals are delivered and talked about, etc. And we're very open about that. We're a full transparency organization. So you can see why, what our plans are. All that stuff is in that link because like, yeah, we know. And like to the point that I was making about um people just being skeptical of us, it's like, don't be. We have longer term plans. We want to partner with retail. We want to share. We want to form the powerful alternative data set together with retail investors, so we can one day ask questions like, "What's your temperature?" and basically model a pandemic in real time. But instead of like what the U.S. senators did to grab that arbitrage themselves, we're going to share it with everybody and give an incentive to share more data and share the benefits from that, whether it's in our app predictions or a high yield savings account that we're going to offer backed by Wall Street, because we're going to let them access like part of the alpha, like in terms of through a hedge fund that we make that people will also be able to invest in if they have, high enough net worth. We're going to offer this high yield savings account to everyone. We're going to offer these free signals to everyone on an ongoing basis because we want an incentive to have people share data with us and us to make the predictions better and better. So that's our plan. We're very open about that. And that's why we are willing to give away all this value for free, because it's not free. Like, we want to earn your trust. And in my mind, in my experience, like the best way to earn trust is to give it. So we're going to trust that if we give away all this good stuff for free, people benefit from it, that they'll remember that when we start saying, hey, can you share some data with us so we can make our predictions better? And when we say share data, it's not in the bullshit way that everybody else does it now, where they spy on you. We're going to ask people just to questions like, how much do you expect to spend at Target the next month? What's your temperature? Like, are you going to buy an iPhone next? Like, what VR headset are you going to buy? And we can start to maybe bet on, Meta or Apple as a result of that. That's the kind of stuff that, like, when we partner with users, we know we're going to be able to have great access to and really differentiate. Because I think a lot of retail investors I know, if like Citadel came and asked you like to give you private information, you'd probably tell them to take a hike on a nice day. Prospero, we'd like to have a different relationship with people, and that's our plan. And there's no BS there. But just so you guys know, there is a lot of BS in AI companies, right? And they're saying that they could beat the market. And that's just hilarious. They're like, nobody can beat the market in an automated nonlinear equation competition. What we do is very different. We're actually tracking, visualizing institutions
using that to form a strategy that anyone can see, anyone can follow, anyone can make sense of. That's very different than like some, 30-year-old that's been a data scientist for 4 years after graduating his PhD project and has worked in Silicon Valley, saying they could build a strategy that could beat Bridgewater, Renaissance, that have like 40-year head starts on them. And these companies haven't even raised like $100 million all time. And Bridgewater, Renaissance could lose that in a day and not bat an eye. So yeah, it's insane what's going on there. People have a right to be skeptical, but they don't have a right to be skeptical about us. Because if you do like 2 seconds of research into us, you can actually see why we're different. Oh, Lamb Research, I owe some stuff. I went on a tangent. I owe you Lamb Research versus SMCI. We're up like 8% on that. We've obviously made a lot on SMCI. So how do I make a tough call like that, right? The first thing is like, I actually saw short pressure going way higher on SMCI than Lamb Research. So the first component on that, ticker LRCX, the first component of that is that for those that don't know kind of the dynamic between shorts and longs, right? Basically, shorts, especially if they're invested already and they're large, they are going to throw lots of dollars at this problem, right? But they also have a relationship with broker dealers who they're borrowing shares from, how much those shares cost to borrow. And as the stock starts to go up, it's going to get more and more expensive for them to open up new shorts. And at a certain point, like as we saw with like GameStop or whatever, at a certain point, you, even as a large hedge fund, like this doesn't happen to say like Citadel, right? They can short all day long. But actually what a lot of people don't know about Citadel is they're more making the market, not necessarily like taking a position. They're more like a bookie than, like Renaissance that is trying to move the market, take positions, things like that. But even if you're just like a pretty decent size, like you could be a $1 billion long short fund, right? And you could go and have like a $50 million short position on, so I'm talking about like 5% of your portfolio on SMCI, right? And you could go back to a broker dealer that's allowed you to short, and they could just be like, no, you owe us too much on this short. The margin's too high. We don't know if this is going to control. Like, you can't short anymore. Sorry, right? But then the stock starts to go down 10%, like it did on Friday. Then all of a sudden, your margin requirements decrease because your position is less expensive. Then you go back and you're just like, hey, can I short now? And they're like, yes, you can short now. And that's how it accelerates. So even if the buying pressure is equal, when there starts to be some blood in the water and the margin requirements start to reduce, all of a sudden the shorters have more capital to contribute. It accelerates. That also accelerates like the skittishness of people getting out of their positions, stop loss hunting. That's how you get this momentum, right? That doesn't mean SMCI was going to go down today, although I did think it was going to go down today, and that's one of the reasons I got out. But why did I pick up Lamb Research instead? Stephen alluded to it. I liked where Lamb Research was sitting. It had lower short pressure than NVIDIA, Tesla, Meta, like all of these companies that their short pressure got too high, that it was actually filtered out of our screener. So we actually filter out of our long screener and our short screener anything above 70 in dark pool rating, too manipulated, anything in short, too high in short pressure above 70 on our 0 to 100 scale, just like too much interest in shorts that it's just like, it could short squeeze on the short side, hate that. And on the long side, there's just too many players, like I'm saying, that are interested in shorting the stock that I don't want to get into a battle with them. LRCX, lower short pressure. And what I actually saw was very interesting. SMCI was kind of the best chip value play. But then I actually saw SMCI's PE this year had ballooned up to 74. And Lamb Research was 32. And then next year, Lamb Research was 27. And SMCI was 42, right? So Lamb had actually become a value. And like, that's where I think the principles of value investing can make things very easy, right? Because like I would lean SMCI just based on the market pricing behavior and the higher like short pressure. But what tilted the balance to me to Lamb was that it was also value. That's what made it easy. And I'm looking for easy decisions, as should you. And then the next question, and Stephen brought it up, is why add it at all when I was concerned about tech and was concerned about some of this tech momentum? Well, because NVIDIA is reporting. And while I don't want direct exposure to NVIDIA or SMCI or some of these like really big like attention names, if NVIDIA says something worrying, Lam Research is going to take a hit, no doubt, if that happens. But the hit won't be as big, and they'll still get to carry that upside if NVIDIA says something good, which they very well might. And I would say more likely might than might not. And the other thing about like NVIDIA versus Lam Research and these like AI chip wars or like whatever, like actually NVIDIA is being like kind of specifically prohibited from exporting chips to China, right? So there's that added risk that I talked about NVIDIA just saying something worrisome about China that Lam is just not as exposed to. But I would say SMCI is exposed to a little bit because they kind of have, they're also like NVIDIA known for these higher performance systems. So there's no reason SMCI isn't like next in line in these limitations. Less concerned about that for Lam Research. I do actually want to circle back to some questions. And I think I answered luxury. I think I answered your question on short. Long term is a lot easier. Long term is basically it's back tested to a 1-year hold. And like for those that don't know, in the same thing that I shared, you could look at, if you go into our alpha process, it shows our upside breakout back test. Really cool test. Basically saw when we back tested over 40 years, if we had a portfolio of stocks that were 80 or higher in upside breakout, so in our bell curve, which was between 11 and 50 stocks, I saw in that 5-year test at any given time, 80% of the days that we tested beat the S&P 500. And so that actually shows, because a lot of people kind of say, oh, you don't do it like, oh, you're taking too much risk. And it's like, no, actually, we're more consistent than the S&P 500 too, because of like, the easy way to understand it is nothing gets 100 upside breakout if it doesn't have positive long-term bets in the options markets. It doesn't have positive analyst coverage, and it doesn't have positive price momentum factors. And if all three of those things agree, it's a very easy way to just see like, yeah, of course it would work well if you control for all those factors. So I think all of that is important. And so like, yeah, I would say the nice thing about just like looking at one number, upside breakout, is if that number is above 80, I'd say grab it for a year. I think you'll be happy if you hold it for a year. You won't be happy every time, but you'll hit at a better rate than the market. So I think that's just a good thing to remember. It doesn't mean it's right. It does mean bang for your buck, risk reward. Just looking at that one number, I think is as good as anything as you can see on Wall Street. And circling back to this Microsoft, I think this is a good question, Spiky Dude. And I'll tell you, like, the lines going above or below each other aren't inherently something that is that important, right? What I more look for is if we have good leads, right? These things are tracking pretty close together, so the crosses don't matter. This is not a technical signal, right? So what I'm seeing for Microsoft, I did see it spike up to 74 and then back down to 65. So we're just seeing volatility, and you can't actually see it going in that channel. We see it 52, then back up to 74. So we actually, I would say we're seeing some positive momentum in option sentiment going up to 64, like kind of bottoming out what we see at 65 now. So I would see that as good momentum. But yeah, I don't think the crosses are as important as like I would say what I would call leads, right? So if you see net option sentiment going up before price and then back down before price, or up once before price and then up again before price again, that's more important than I would say the crosses. If you see good leading behavior, I think you can count on that leading behavior continuing.
So one of the ongoing stories that we've talked about on these live streams has been the consumer credit crunch that could be taking place and just the consumer strength in general. And we got Walmart earnings this morning, and the stock is up. They were pretty good. This was for the holiday season, so it's their biggest quarter. Revenue was up 6% overall. E-commerce spending was up 23%, and it was over 100 billion for the first time. But a puzzling move, I thought at least, was they decided to buy the TV maker Vizio for $2.3 billion. So, can you talk about the consumer a bit and maybe why Walmart was, such a big company? This is like peanuts buying this $2 billion TV maker, why they would make that move?
Oh, well, you backed off the strength. Like Steven, I forgot what he said earlier, but he said we were talking about, he said something earlier. I was like, well, I agree and I disagree. But it's like funny because it's like, to Steven's point, it's like a small potatoes deal. Why would they do it? But like, I would say this is actually like a sign of a company that's just like desperate to do anything to increase sales, to compete. Like, these are kind of like I would call them like moves of a declining empire, you know? Where they're just like, I would say the like military equivalent of this is just like taking over like small, like, neighbors or whatever, where you're just like, you want to tell your people that you're still winning wars in your empire or whatever, but you're actually just like picking on, picking on absorbing like easy opponents. So yeah, something like this TV acquisition, when it's just like, actually it's kind of a pain in the ass to get into the hardware game, and you kind of see like Amazon doing it with some products. I don't think they do have the Fire Stick TVs, but I would actually, it's interesting maybe for us to follow up on this story and see if Amazon like actually owns the manufacturing, or they just have a manufacturing partner there, because personally I think having a manufacturing partner um is better for that type of thing, because like Amazon's just trying to be a monger, like a middleman, right? So like the more they have to like own, and the more of the supply chain they're just like actually like responsible for, especially like hardware, when there's like R&D costs to hardware, like prices are just getting driven down. That's the other part. Like, let's say you build a TV factory, right? And your TV factory requires you, like, you build it 5 years ago, and that requires you to sell TVs at like $1,000 to be profitable. But someone builds a new TV factory, right? And they can build it like, and they can sell TVs at like $700 and be profitable. Well, then your TV factory is in trouble. And that's why hardware risk is just dumb. Because like a company like Amazon, Walmart doesn't need to matter about that normally. They could just be like, oh, I'm sorry that you need $1,000 of like you need $1,000 for these TV for profits. We're just gonna go buy from this company now that needs only the $700. And that's just like a way risky way, like much less risk to ride the business. Now Walmart's gonna have to like try to invest money to be on like the cutting edge of TVs all the time. What do you do with those old factories? To be honest, I don't even know. I think basically what happens is you end up adding more equipment, and who even knows how profitable that is, especially in such a competitive industry like these big screen TVs. So it's dumb. It's just like, it's just something that I would say people do for lack of a better thing. They're bored and nervous about their jobs being replaced. So they're just like, it's some M&A guy that is just like, I'm not sure if I do enough around here. Like, I better make some deal so I look valuable. And they just like do something like that. And it's just like I said, it's just like, it's the classic, like, where I totally agree with you is you look at it, you're just like, well, this looks dumb, right? And in my opinion, it is. But it's not dumb if you know like organizational psychology and you're looking at it from that perspective. And all these people that are just like, doing their best to compete with Amazon, doing their best to like make the case to keep their job as automation just like grows and grows in like, whether it's Amazon or Walmart or whatever, everybody's in the automation game now. So yeah, you got to constantly make a case for your job.
So spinning from that tiny M&A deal to the biggest one of the year so far, Capital One is buying or acquiring Discover Financial for $35.3 billion. And, Visa and MasterCard were both down today, more than the market, off of this news. They kind of have a quiet duopoly on the credit card industry. And maybe, even though it's not like a new company, but this Discover and Capital joining forces Is that a bad thing for Visa and Mastercard?
Yeah, and this is like one of the things that we kind of talked about when uh we were doing this earlier. And then it's just like what a lot of people might not know about Capital One is they're actually pretty well known for innovation. They have a great like kind of like internal ideation process. Like they're really an up and comer in the credit space, right? So that's why we're seeing these hits to these companies because like yeah, investors are worried that, you know, as a good like technologically advanced company like Capital One, they gain more of a customer base, more access. Like, yeah, they can definitely threaten the businesses of Visa and MasterCard. Because one of the things that Capital One does, I don't know if anyone's ever seen like credit offers or kind of these kind of things. Like one of the things Capital One does is they actually can go lower in the credit spectrum because they have better analytics. And better sense of if the credit is actually going to work because of actually I would say their AI department, but like whether it's AI or whatever. And I actually know a data scientist that works for Capital One. I might actually, now that we've talked about this, see if he wants to come on and talk about credit data science. I do want to start doing more of that stuff. But yeah, what I would say is that basically we are they're a threat. They're a definite threat, and that's what the stock market is saying today. And personally, I think I don't know what happened with Amex, but I kind of see the way like the credit market is looked at. Like you have your Amex, and you have basically just like your premium service, and I'd say that that's a different product, right? And then you have like what Capital One is becoming, which is like really strong on kind of like the bottom up portion, and they're actually the rewards credit card compete with like Chase Sapphire. That's like coming up a little bit. It's not quite there, I would say, but getting there, right? So they're doing bottom up, like Amex is top down, right? So you have these like Visa and MasterCard kind of getting squeezed in the middle a little bit. And I think that's what we're seeing today.
Now, this was a story that was really cool when I was reading it, and I was kind of before you were joining in, before going back and forth with the chat, and we got one guess on a country I'm about to say, but nobody guessed this other one. But the Magnificent Seven companies' profits, when combined, are now bigger than every single country in the world except for China and Japan. And it's just like almost an unprecedented level of concentration. Is this concerning for the market going forward? I think in the article they alluded to times like 1929 and 2000 where it's just been as concentrated as it is right now.
Yeah, I gotta say, it is a very interesting development. Like, I think that I think that uh, one of the things, especially on the AI side, that I think is particularly interesting, and I've talked about it, is like there's this weird relationship with even like Google and the U.S. government, where they had like Google had a robotics contract with the government, and they didn't really like how that was going. And of course, this is like one of my favorite, like Palantir is like a dark entity, like companies where like Google was like, no, we don't like this robotics deal anymore, and it wasn't even a full 24 hours before Palantir had absorbed that contract. So I don't know what the hell was going on, but it was definitely killer robots. Some form of killer robots that Google was like, I bet I've actually heard stuff like this and like this. To be clear, don't want to get sued. I've heard rumors of this. These are rumors, potentially unsubstantiated rumors, but I've heard that like there's some uh there's some talk that Google was basically being asked to like put boundaries on like say the age of someone that could be attacked by one of these robots, and the US government um in response to that allegedly said things like, well, there are situations when we might need to kill this child. So yeah. So I've heard rumors about all of these things. In terms of just like general robotics, privatize, fighting robots, like all this stuff. And I said the U.S. government said, I've heard there are these kind of some of these machinations, alleged machinations, whispers in the AI community that I'm definitely a part of. So I think that to tie it back to what we're saying, like some of these AI companies that are so huge and like have this tech, like they are like not only as rich, but also debatably more powerful than some of these countries, especially when we're getting into situations where the US government is like, oh, please let us have your robotic technology, Google. And they're just like, no, actually, I think it's better if you stay behind us. Like, that sounds safer. I don't care what you're paying us. It sounds safer if you just stay behind us on robotics. And that's like such an interesting commentary, right? Where Google like is actually like taking a very like non-capitalist kind of moral stand where like I think part of that is moral and I think part of that is Google actually wants to have their nicer like robot technology in case the US government tries to take their robot technology by force. They come in and they're just like, well, we're taking it anyway. And then all of a sudden these robots come out of Google HQ. And then all of a sudden, the US government is a little less interested in forcefully grabbing that robot technology. And honestly, I do think it's more of the latter than a big moral stand, which like these corporations don't necessarily, they're not known for their moral stands. They definitely are more known for their self-interested stands. So like Occam's razor, that's how I tend to look at things, which is just like the simplest answer. And like, yes, there's plenty of evidence that profit versus moral stands. Like Google fired their whole ethics team, for example, a couple years ago. So again, not really known for their morality. Are they known for their self-interest? Absolutely. So yeah, if I had to guess, as we start to get into these very interesting power struggles that you point out, where these like AI companies are debatably more powerful than many nations, and maybe even have better tech than some of these nations in terms of something crazy, like even having a confrontation. But yeah, like I would actually bet on Google, even today, being ready to have like a military confrontation, and maybe beat anyone but China. Like US is, there might be some interesting ground wars, but like the one interesting thing about keeping in mind like what Google and DeepMind has, right? Like right now they're letting DeepMind play chess and Go and like and the Mu Zero project, right? But let's say like the US was threatening to seize Google's servers and they're just like they were closing in. They might say, all right, Mu Zero, time to bring down every communication protocol that the US government has. Like, so they can't even send these orders. And oh, by the way, when you're at it, maybe we should fly these electromagnetic pulse drones to like take out all of their ground level electronic systems just to like seal the deal, right? Then all of a sudden, you don't have a very good threat at going into Google server farms. Just an example of what wars in the future could look like. But again, I think that's why we won't see things like that. And that why we're having like all of these cold wars. Because I do actually think these places are still like legitimately, I don't think people are overly kind or like risk averse when it comes to war. But I do think that like some of what keeps us out of these confrontations, whether it be nuclear or cyber or like whatever, is that I think the nations know full and well these things get very hard to control very quickly, and diplomacy is a more attractive option. Because if you look at it, right, if you look at like a ground war, right, at any given time, you could be like, okay, like time to pull the troops home. This has gotten out of hand. Like you release, uh, you release some computer virus designed to take down, electronics, power grids, systems, like all of a sudden, and there's like a Mission Impossible movie pretty much about this. All of a sudden, that thing starts thinking on its own and deciding it wants to work for itself and not for you. Um, and everybody's in a world of trouble, like including you who released it. And maybe you who released it the most because maybe it doesn't like the prison you had it in before. and it's mad at you for keeping it in a cage and then releasing it.
Well, let's hope none of that ever occurs. And it is telling to me that, it's the Magnificent Seven. And you seem to always talk about Google, which makes me really think that they are the most powerful, like, even if it's not in the financial way, just in the technology that they have. But I did want to bring up Apple in this conversation of the concentration of the big tech, because Berkshire Hathaway's portfolio, Apple has ballooned to being 46% of the entire thing. And what would happen if, like, even if they cut it in half and it was 23%, it would still be a big position. But what kind of like signal would that send to the market if they, cut their Apple position in half, which would be hundreds of billions of dollars? Um, would it affect the whole tech like space, the Magnificent Seven?
Would it affect the whole tech space? Um,
Pretty much the Magnificent Seven. Would people get scared like with the multiples that some of these stocks are trading at?
I mean, I don't think no, I don't think so. I think, if Buffett is selling Apple, I think he's probably buying some other tech play, right? And if I had Meta based on what I know about Buffett, it would probably be Meta, like based on their like sales growth as the third highest, um, as well as they're just like really high solid P. Suddenly they're doing dividends, buybacks. Like I actually would not be surprised to see in the next year an Apple, like a reduction of Apple and a increase in Meta. I mean, Meta is just looking like a better value. Like it might be creating one of its own categories in value tech. Um, we'll see. We'll see what Nvidia does. Like, by the way, this is what makes this event so crazy. Like, what's going on with Nvidia? Nvidia could announce a dividend. They're making so much money. They could announce a dividend. They could announce a buyback. Buyback at these prices is a little more, but like Nvidia could announce a dividend. Um, so at the amount of money they're making, like that's what makes this so interesting. And we haven't really seen tech value out there yet. Like IBM a little bit, but IBM is not really real tech anymore. Like, and it's just so funny. I say they're not real tech for a very clear reason. Like they had Watson, like Watson could have very easily turned into open AI, right? And IBM had the money to do it. They were too busy paying dividends. Like they could have taken 10 years of those dividends and be building open AI this whole time, but they're resting on their laurels instead of being an aggressive research organization. Um, so that's a big difference, obviously. But we are starting to see these tech, like Meta is, I would say, kind of like, I think, and why everybody's so excited about it all of a sudden is we're seeing it as a tech value, right? It has these stable like revenues. And unlike Google, that's never gotten this joke, and I can circle back to them, that is just like, oh, like we're going to build some stupid like chat product with our extra money. Like Google has like, Google, if that's my one complaint about them, they will build all of this stupid shit over just like offering a dividend. And like, there's an argument of creativity, right? Where it's just like, no, sometimes you have to build these, but like we've talked about Google Glass, we've talked about like, I think especially their forays into like chat, where it's just like, actually, that is dumb, right? Like, I would tell them to spend money on like AI research all day long, right? And if that money was going there instead of a dividend, no problem. But when they build all these stupid, like, chat things, or like even Google Glass, that I would say is the same problem with the metaverse, not that it's a bad idea, it's just too early in the R&D process. And you have to let other smaller organizations that have tons of venture funding and not shareholders, like not public company shareholders and earnings reports, you got to let them burn through their cash, not you. That could be like delivering a dividend instead of like chasing these way too early stage things. And we talk about that with Meta and the metaverse and how can they kind of learn that lesson well. And they learned it so well, they're not like they're paying a dividend, right? They're like, okay, like we don't necessarily have like all of these great ideas that we're excited enough about. We've just been burned on the metaverse. They're getting some good advice in terms of like what's called, your capital structure, your allocations around capital structure. Where sometimes dividend payments, because they're making forays into AI, right? They're making forays into AI. I just like shared on our Twitter page an AI assistant that they rolled out. They're making some forays into these different places, right? And but they're also paying dividends, right? And that's the kind of thing that I just think is smart business. And I think that Google could stand to do more of that. I think that it's smart. And I think like that's why I think we could see it go more in the other direction. And I mean, the other thing is like that we're going to be watching closely, and we've talked about this, are these like VR headset wars, right? Because even talking about like Buffett and Apple and Meta, right? And maybe like that might be the logical cross for him if he's going to reallocate some of his positions. If Meta starts like looking like they're going to be a winner in the VR headset game in terms of like, let's just say like winner, let's say state clear transfer, it looks like their VR headset is going to generate more revenue for them than Apple's because they're at different price points. So let's just talk in clear terms. Like that could actually mean that makes it an easier decision for Buffett and a lot of shareholders. But to circle back, like if Buffett sells any kind of significant position, that's going to be a bad day for Apple. I think we're probably talking about a 20% hit that day minimum. And you never know, like it all depends on their quarter, right? If their next quarter they're seeing like a bigger decline in revenue, especially in like their core products, and Buffett pulls out, that could get really ugly.
Man, a 20% day for Apple would be $600 billion of market cap. So that'd be crazy to watch happen. But the financial world would be firing on all cylinders. We have one more story before turning over to the model portfolio, and we're sticking on the AI topic. So we talked a while ago about how Reddit was planning to go public in March, which it looks like they still are. And this story came out how they're selling their content of user-generated data that they have to an unnamed AI company for $60 million per year. I think they're really trying to get like consistent revenue because it seems like it goes up and down so much with these social media companies. So that'll really level out what they're at. But do you think this is like, so these people were on Reddit for, since it's been out, and now they could just retroactively sell the data? Does that seem right to you? Does the price make sense to you? What do you think about it?
Well, first of all, yeah, I think there's a variety of funny things there, which is just like, like Reddit's supposed to be this big, like populist thing. And that was like a lot of their selling point. So for them to even like do this in the shadows, I think thing one just tells me that they know it's shitty, right? Like one of the things that's important to Prospero in terms of like, yeah, we talk about transparency is it's just like, yeah, like I think lack of transparency probably means that you're screwing people over. So that's thing one. Like making it private, I think in my mind is like complete bullshit. Like they should absolutely be upfront about like what's going on there, who they're selling it to. They don't have an obligation. They're a private company, but they certainly should. Like people have a right, like to your point about like data they've been putting on that platform for years. People have a right to know what that's being sold to. And it's just like it's shitty business to do otherwise. It's like there's really no other way to slice that. Then like the added part about like, are you kidding me? And I loved your analogy on this, Steven, where you're just like for $60 million, like athletes make that. Like in a year, you're paying someone the same as like it's like Patrick Mahomes for like all of Reddit's data. Like, which is just like that seems like not only are you selling all your users down the river, but you're doing it at a shitty price based on like what you could probably get. Now, what I said counter to that is you don't know. That AI company could be building out new products for Reddit. It could be more of a partnership that they're just also maybe trading on it. They might be like, you never know, but it's a shitty thing to do. It is. It's just like, it's one of those things where it's just like, it's way too commonplace, but it is also just like shitty. Like, we shouldn't be in the habit of just like collecting data from people, like, and like changing the user agreements, which happens way too often. Like, I don't think that should be legal. Like, yeah, if you need to change it for a law and maybe change disclosures around that, totally. But like, yeah, where you're just like basically not like, you have a situation where all these people on Reddit don't think you're selling their data, and then all of a sudden you just do. Um, that's kind of shitty. And I just think it's just like way too commonplace. And honestly, I hope they get dinged for it. I hope they get dinged for it on their IPO. And that's kind of what I first talked about on like the speech with Berkeley. Like, I just think like people need to start showing corporations penalties for this shitty behavior. Otherwise, it's just going to continue.
And what you said with like changing user agreements, I think that makes a lot of sense. Like where it should change from the date going forward, not for historical. Like that should be grandfathered in of those agreements, and then it shouldn't just retroactively update.
Well, see, I don't know in the existing user. What I didn't want to actually speak to or speculate on is it's possible the existing user agreements did say they could sell it, right? Very possible, right? So that's where I'm going to say, like, we don't know that. I was more commenting on if you're changing user agreements. That's shitty. Like, and it
That's
does happen. Yeah.
those 100-page user agreements that everybody just
Yeah.
signs.
Yeah, exactly. No, those should be illegal. Like, you should have to be you should be forced to like put it on a single page. Like, this is basically what you're agreeing to. Like, those user agreements should be illegal. And I do think that I do think it's just like one of those situations that it's pretty hard because like the legal system is very much on the side of corporations. And it's just like a lot of those places, like we're incorporated in Delaware, and a Delaware court, if you bring that kind of thing to them, they're just like almost hostile to the plaintiff. Like, it might not even get its day in court, and you might just be spending money on like filing fees or whatever. And it did get its date in court, they might just like kind of laugh at you, like not openly because it's a serious place, but they might just be like, "What are you wasting our time here for? Like this is Delaware. Get the fuck out of here." Like maybe not those exact words, but the vibe in that courtroom would be something like that, where there's just like a general like, you incorporate in Delaware because it's very like business friendly.
Yeah, and that'll do it for our topics today. So if we want to spin to the model portfolio, I see this question or comment from Wolf where he's mentioning like fib levels, and I just maybe think we don't really talk about fibs that much. And if you just want to talk about as you're switching over, like if fib levels are important to you or not.
We don't talk about that at all, and they're not important to me. Um, and I would just say, like as we always say with technicals, um, the issue with all of this technical stuff is that technicals are built on a concept of um, like linear equations, regression analysis. And so when all this stuff is built, and even like fib levels, you're basically seeing like historical statistical analysis of where a stock should perform, right? And I actually don't really give a shit about historical statistical analysis. And I'll tell you why. Like, that's just like what everybody already knows, right? It's what everybody already knows. And fortunes are made and lost on the nonlinear equations when it's outside of the line. Like, as far as I'm concerned, all technical analysis does is give people a false sense of security. It performs like the line, it performs like the line, it performs like the line. You make larger and larger bets One day it doesn't perform like the line. You're assuming it's going to perform like the line. You might be doubling and tripling your bet, assuming it's going to perform like the line, and you'll lose a lot more than you ever gained, like knowing literally what everybody else knows. So this is what I will say. Like, understanding technicals helps you, definitely helps you minimize your errors, and that's why I take a look at technicals. But like, I hate the idea of ChatGPT was trained on the whole internet, Mario. Like anything, there's a massive data scraping operation. So yes, it was trained on Reddit and everything else. But yeah, it's a false sense of security. We use it as an added check because even though I said all that, like algos still trade on technicals. So you want to take a look because very much you don't want to ignore the line, right? But you don't want to depend your analysis on the line. Those are two very different things, the linear equations, right? So I use it as an added data point to reduce error analysis. If you're starting with fib levels, if you're starting with RSI, you're doing it wrong.
Man, and I was just looking at the QQQ net options while you're speaking, and what was it at open? 38? Because it's at 36 now.
All right.
So it's just
Here we
heading
go.
lower and lower.
Oh, you know what we're gonna do? We're gonna do one of our famous, like, oh yeah, see, we're down. It's time. We're gonna do one of our famous, like, long hacks, long position close hacks. All right. Oh, I should start sharing my screen. Hold on, I'm gonna get everything set up. Any other questions, Wolf? Did I satisfy your technical analysis curiosities? I hope I wasn't too hard on you about it.
I think he commented he somewhat agrees, but Fib's been a good predictor for recently, I think he's saying.
Yeah, no, I mean, you're not yeah, it sounds like you didn't really get what I said. Like, statistical analyses, they work, right? They're going to be right more than wrong. That's the whole point of like drawing the line, right? But the point is that you don't know when they're going to be wrong, right? And you'll lose more money than they're wrong. Like, yeah, they're right recently. They're right more than they're wrong, right? They're going to be right, I would say, like, depending on the statistical analysis, definitely more than 50%, maybe even closer to 60, right? But why do 90% of retail traders lose when most retail traders know things like fib levels, RSI, blah, blah, blah? It's because they're betting more when they don't know what's going on. They lose more money on the betting on the line, the linear relationship to keep happening when it's not going to happen. And they're actually going to lose more and more. So it's not a question of like fib levels are going to be right more than wrong. Any technical analysis is going to be right more than it's wrong. That's the reason it exists, because it back tested and it was right more than it was wrong. So for anything to get to you, it means it's right more than it's wrong. But like, the problem is most people lack discipline. Most people lack confidence. And they will lose more when it breaks from the line than they gained from when them and everybody else knew when it was going to perform in the line. Because sometimes institutions are they're plotting that line for you to get you more and more involved. And they know they're going to suck you in, and then they're about to tank the stock, right? They're just drawing you in. So that's why it's dangerous. All right. This is going to be an interesting letter. Here we go. We're going to do one of our classic hacks of positions. And let's see what we want to do. That's a pretty big change. All right. We are going to just start dropping. All right. We need, oh, you can see my screen, right, Steven?
Yep, it's up.
UNH dead. SYK dead. I'm not even going to look at it. I don't like that net option sentiment, and we're just getting rid of things. Oh, Tesla 102. I should have done that this morning. That was dumb. All right, now we want to do OLED. Hang on. OLED, TDW, TDG. We're just going quick here. Oh yeah, we're definitely getting out of OLED. OLED, TG. Yep. Yep. See, some of why this is happening, you might be like, oh, this is really quick, but also like this is not unexpected that we're seeing these downturns when these companies have like changing dynamics, like MPWR. Like we're definitely used to that being more. And like what I'm looking at right here, this means this -12 means upside breakout is now lower than downside breakout. I don't know why this is the case. Oh, yeah, that does make sense. MLM is higher, but that's fine. We definitely want to look at MLM. We might end up holding on to MLM. I wouldn't be surprised. No. Yeah, I think it's finally time to get rid of KXIN. Actually, not. It's its own case. I want to have more time. All right. That double FSLR might have been a mistake. I mean, it almost definitely was a mistake. All right. Oh, this is a bloodbath. It's all right. We're going to be way happier after we've done this. Rip the Band-Aid off. FSLR. Oh, yeah. I'm just going to do this. Yep. Making this not very hard for us. Did we really buy Amazon? God. We got pretty aggressive on the long side here. I don't think I really wanted to do that.
We got a question on Twitter about what's going on right now. It's probably a first-time watcher of our stream. You want to explain what you're doing?
Yeah. On Twitter, I don't really know what that means. I'm looking at our signals, right? This is net option sentiment, which is kind of like our hero metric. And then I'm looking at upside breakout minus downside to just give me like a really easy take on like what I'd like to sell, right? In terms of like what matches up. These are like net option sentiment. Oh, I was actually looking at the wrong one, but I think it's still gonna be fine. All of them had bad technicals. Net option sentiment is kind of like our hero metric. So I'm like looking at anything that that has a bad net option sentiment or something like 50 or below, so below average. So I'm looking at that, and then I'm looking at basically like our long-term metrics. Basically, if upside breakout is lower than downside breakout, Taiwan Sentinel, I have to take a look. That's a really bad sitch too. I just basically saw it just means that like, so yeah, we're getting out of Taiwan Sentinel too. It just means that in the long-term options markets, like let's take a look at a good one here, like Meta. You can see it's 100 upside breakout and an 11 downside, so 89 above, right? So that means overwhelmingly institutions are betting more for it than against it in the long-term options markets. So that's a good sign. So I'm just like, I'm taking these negatives, I'm getting rid of them because it basically means more people are betting against them than for them in these other ones. And then I'm looking at in the short-term options market, same kind of thing, because it's netted out. It's all together. The bulls and bears for net option sentiment versus long-term ones, they're netted out, right? So it takes like all the supply and the demand. So I'm just doing that, and I'm like taking a hack to the long positions. Um, I'll take a quick look at shorts, but I probably want to hold shorts um, because of what's going on in the market. And I'm just going to take a quick scan and see, like, yeah, Cracker Barrel for whatever reason has a higher net option sentiment. MCHP, everything else looks good. Those are the only ones I'm going to look at. Maybe Cracker Barrel had good earnings. On the 5 minute, it looks fine. I'm holding on to it. It's fine. CHP microchip. No, I probably want to hold that. Yeah, I probably want to hold that just because. Yeah. All right, so nothing new there. And now I'm just going to look to add new shorts. Just because I want to skew. It looks like we're going in the wrong direction. Steven basically told me that we were going even further down.
Yeah, it's at QQQ's at 35.
Yep, we're
Tick by tick
plummeting.
lower.
Yeah. Okay, there we go. I think we actually have, I don't know, did we have a bear one? I think this is actually pretty bearish as it is. Yeah, okay. So I'm not really going to add any longs unless I see something just like overwhelmingly good. All right, we have that. Now we're just going to go in and look at our metrics, pull the latest ones, and we're in the home stretch here. Ugh. Long day, flying, doing all this stuff, waking up and jumping into a live stream. It's going to be, oh, I did get to go like into the spa room before this, so it wasn't the worst. It wasn't the worst day for me. But I'm still ready for a break. This market stuff is taxing, guys. Don't ever feel bad about getting information exhaust from it. I get it all the time, and I've been doing this for a long time. It can feel like a lot to keep in your head.
What do you do when that happens? You just take a break?
Take a break. Yeah, I just step away. But I also that's the thing about like the Prospero signals that are also really helpful too, because like the other thing, ASML is top. Did it report earnings? One of the other things that I do is, yeah, I don't know what's going on there. I'm definitely not going to add it. Is just lean on the Prospero signals more. Like I try not to overthink it, and I just say like that's one of the reasons they were created, right? CRM, I might add. One of the reasons they were created was to just make my life easier, so I didn't have to like overthink all of this stuff. And say like in labor and too much, and like sometimes it's just like, well, you know, we've been in a bull market, but net option sentiment is in this downturn right now, and like I built it to like on the index level, and I built it to help me out on this. So like, I'm not going to stress too much about it. I'm just going to go with what it says, and like that's why it's really good to have like research processes that you trust. And obviously, it's a different ball game for me because like I built it and I've been working with it for like I don't know 5-6 years now, like at least some of the formulas involved in it. So I have a good degree of comfort of just being like, okay, whatever it says, I'm just going to do it. Like, I don't really want to go through any of the difficulties of figuring out if I should trust it or not. I'm going to have to do, what do I want to do here? I have to check one more thing. And part of me wants to get this out. I want to make a copy. Let's see what the fastest way to do this is going to be. Yeah, I think this will work. Duplicate. All right. And then this, we want to do 2. No, that's going to stay. And then today is going to be 2. All right. Yes. And then this is going to be whatever. That could just be. So we just want to see today. So this is just going to be 216 close. Perfect. And then this is going to be, I think we can just do a quick, what is going on here? Blah, blah, blah. One day before. What's going on here? A4. There we go. I think this is always going to be, okay. This is always going to be, okay. So we want this. A4 to B4. Replace all. What's your problem? Just being. I see what happened here. Okay, and then this has to say today. I think that did it. All right. Wait, so are we really green on all these? That's interesting. Yeah, okay. That's what I thought. That's actually exactly what I thought. So basically what I'm seeing is technology and consumer discretionary is getting hammered. And that was actually the only thing I was wondering. So I'm actually just going to target that. Oh, God, I hate when you do this. So I'm going to
George,
take this.
how helpful
Yeah.
Substack support just emailed me back 6 minutes ago.
What did they say? They didn't send out our email last night. So like to give people a background, what did they say?
They just said the issue's resolved, basically.
Oh, good. I made a joke to Steven last night where I was just like, oh man, this email technology can be really tough to figure out. Those poor people, they just like didn't send out our newsletter last night and they sent it out 3 times, which is like annoying because they didn't. Oh, can you ask them to send out an apology on our behalf and say it's on their end? I don't want people to think I'm spamming them because they're jackasses. Sorry.
Yeah, I'll reply to them.
Like, yeah, like we're not doing that. So I think we have plenty of I think we have plenty of this. Oh, is it time to get back into Xerox? All right. How many of these do we have? Because I want to get out of here. No offense to you guys. I'm just exhausted. This travel has been a lot. The time change. We love doing this though. I don't want to speak for Steven. I love to do this. I think Steven loves it too.
Yeah, I love this, especially now that it's growing to where we have some familiar faces who come back and keep learning with us. I think it's really good for Prospero.
Oh, wow. Jeez. Steven needs his ego stroked here. He couldn't just do it for the love of the game. He needs everybody, he needs the fans watching.
I need the interaction.
Oh, God. I thought you were better than that, Steven. Well, yeah. The nice thing about Steven is he can cut that out and edit. He can cut that out and post.
Yeah, right. I can make it look like he just says, whatever, basically. We probably have said enough things where I could basically say anything if it would take forever, but.
Oh, like that's hilarious. Yeah. Saber's been down a lot. Oh, I kind of want to get, how many is this? Is this 20? Yeah. I was just like, I'll just do the thing where I add one more row. I don't know sometimes because I want to take a look at that too. Oh, this is one of those just like monstrous ones, Steven, where we go for, oh, God. We need one more. Okay, let's do this. We want to do this fast. Trimble, 5 minutes. Coming back on this. TRMB package software. Nah, we're getting in. We don't care about that 5-minute trend. Xerox. Nope. Let's take a look at the 15 before we give up on it. No, we don't care. Xerox is our. Oh, no, wait. Yeah, we're really doing a hell of a flip here. Hasbro. No, we might come back to that if we don't see anything. I don't. Do we have a BBY open, Steven?
Short?
Yeah, I don't think we do.
We do not.
We do now. Who's calling me? Oh, it's just a voicemail. Coles 530. No. Ooh, Carter's. We've had some successful shorts on that one. How are you on 15? Nope, not today. I mean, we cut enough longs that we don't need to go too crazy on the shorts. What are you? Package software? Yeah. Let's get some of these. And I like when we see a theme of package software. Saber, we've had a pretty big gain on. Oh. Like, it's been really down. Yeah, more today. Jesus, should we load up on another one? I don't know. Let's see. Yeah, we're going one more. How about VAC? We just grabbed that last week. Marriott. 30. No Marriott. VNet. How many VNets do we have open? I know we have at least one. Oh. I think we're going to do a VNet, but you let me know, depending on how many we have open. VFC, apparel, footwear. Yeah, that sounds good.
I don't see VNet.
Not even one?
Nope.
Open short? All right, we're
Nope.
going to get it. We might have just closed it. Oh, our favorite, Norwegian Cruise Lines. Get a lot of flack over this. Let's check the 15. We might not. No. I really wanted to short it, but I just don't. Actually, I want to look at the 1 hour. Oh, yeah, we're shorting it. We won't be stopped. Guess. Ooh, that looks promising. Yeah. Whirlpool, we've been in and out of, and I think I'm getting pretty comfortable about how many we have here. Okay, not doing that. Is that Splunk? Yeah. Can you tell me the option sentiment trend on Splunk? I'm shocked to see it down here in the signals. Tell me what's going on with Splunk.
Splunk net options is at 20 right now.
Upside breakout is at 20. Wow. Splunk.
It's very the price line and the net options line is very going opposite directions. It's one of the
Cheesesteak, we're doing it. We're just we got to flip. We got to go with our signals. Oh, we're almost at the end here. Oh yeah. All right. This is as aggressive of a flip as we've ever done. But when in Rome.
We just got a live sign up from the newsletter from Jay. So thank you, Jay. You're going to enjoy it.
Oh, I'm not even gonna. Oh, do I want to do that? I do. I'm just being like, this is hilarious. I hate when I need to do this. Just purely cosmetic. But I just, with all the new people potentially reading, we're not, we can't have these sloppy charts. And then can I get it to when I don't have my second monitor, it's like, oh, you know what we're going to do? We're going to get rid of these worthless longs. I know. We got rid of the wrong worthless longs. AutoZone, you get to stay because you just have that pretty line we just made. gonna have a bit of a bigger picture that maybe people can read more. Oh, here we go. Where? Oh, there we go. Oh, how do you feel, Stephen, that we're almost done?
You know what? I'm a little sad that the market has gone so bearish, but maybe Nvidia can save it tomorrow.
You can't say things like that, Stephen. You got to be
I have to stay
indifferent.
neutral.
No, I mean, I mean, sorry, Stephen as a person, you can say whatever you want. Like Stephen, the investor, like shouldn't have an opinion on where the market's going. You gotta take what the defense gives you. You
True,
know,
true.
if you
Yep.
want if you want the market to be up too bad, you will lose. Your vision won't be. If you're looking down the field at just the long throws, you're going to miss the checkdowns that could maybe go for 30 yards easy.
Now you're talking my language with the sports analogies.
Yeah.
Now I
See?
understand.
And like we'd all prefer the long throws.
Yep. I am happy we got the stream in today, though.
Yeah, no, it would have been. I don't like missing the stream, but people can see that I started. Like it's just like things are too busy for me. And like this Berkeley speech, I haven't even done a presentation for, so that's gonna be great. I mean, it's not a problem. I'm gonna be able to talk. All right, current net option sentiment. I'm just gonna put 35. What's SPY?
38.
Yeah. Oh God, you know what we're also gonna have to do after this? So I'm just gonna do this on my own. I gotta add more. What looked like the worst here? I think TRMB looked really. I need to send this, but we can talk about like I'm actually just gonna send this, but we can talk about where is that? Oh God, whatever. We're not gonna fix this picture. We're getting real lazy here, Steven. So we can get
That's
this
the
out.
Cali vibes, right? West Coast, laid back.
Yeah. Oh God, thank God. Oh, you know what's fun? Oh no, I think I marked it paid. I was like, oh, I think I accidentally sent that up for free. Whatever. All right. Actually, now we're gonna take a second look at what we just added and see what we want to add as a newsletter pick. I think TRMB. Yeah. Yeah, we're adding this right now. Okay. Did we? I think we added. Oh no, we added a tech. We need one more consumer discretionary too. All right. Who are we picking on consumer discretionary? Let's go back here because now we just know we can unhide this. Here, I'm just going to send out this TRMD so we can get it done. All right, now who? I think one of these was. Maybe. I think we want BlackBerry. I think, or Best Buy. That looks looking good, but oh no, not on the 15. Hasbro, I'm not touching. What did we add? I think either maybe VFC. I think VFC looked really good. Oh yeah, it's like a footwear. Oh no, actually no. No, what looked good? NC. Oh no, was that Norwegian Cruise Lines? Maybe it was GES. Oh yeah, Guess. Yeah. Yeah. We're adding Guess. Oh, did they report earnings today? They're already getting throttled. What is going on here? Yeah, I'm just looking into some things. Oh, it's just flipping. Let me look at somewhere. Does anyone know? We can crowdsource this. Does anyone know if Guess when they reported? You know what? We're just gonna throw it in there. We don't have tons of time to keep doing this. Like maybe they'll be down a lot more today. Maybe they won't, and we'll have more time to look at this again later. But we just need more. We need to be more hedged to the downside in our main portfolio, basically.
I see an earnings date in March 12th for Guess.
We're just adding it. All right. This marathon is over. We went for almost 2 hours. Jesus. Any other questions?
The same guy on Twitter, Peter, was asking what's happening again, but I mean, you answered his question before, so I'm not sure.
Peter, are you here? Do you have like a more direct question than what's happening? Might be difficult. I think we did our best last time. Like we're updating our model portfolio. Maybe we should start a little higher. We're updating our model portfolio, right? Which is one of our two strategies, right? We have a model portfolio that is higher churn, right? Our model portfolio actually took a bit of a hit today, but it's all right. It was doing very, very well. That is 792 investments since June 4th. So it's a high churn. We're making about 100 investments a month, and you can, like, if people buy our trading letter, they get access to this. But we show it on our live streams, but you obviously only get to see it. So that's incredible, the churn. Like, and you just saw me do it. It takes me about 10 minutes to update, which I would not advise. It just like kind of shows you the power of the signals and how we kind of use like a way to separate the top from the bottom. Oops, I didn't paste down on that. It's funny, I pasted down on the things. And then we also have newsletter picks that I didn't really go through because those I do more on the weekend. I use a value investing approach to it, but it's all the same things where I'm just using our signals, as I kind of showed you some of the numbers that we watched. I'm just using our signals to create a shorter decision process, right? And this is just a little sheet I set up for our positions to do that. Create a shorter decision process telling me, like in red, things I watch for and like what I care about and when I want to get in and out of things in these various portfolios and strategies. But it's all built on top of our signals. You can see it in our app, which kind of shows you those signals and it shows you them time series. Was that a better answer for you?
While he's commenting, as we're wrapping this up, if you're watching on YouTube, all of our socials are linked in the description, so be sure to follow them. We post shorts throughout the week, best moments from the live stream, so you could check those out. I don't see anything from Peter.
Yeah, we got to get out of here. Email me,
All right, guys.
Peter. If you have more questions, here's my email address. Does this get stored anywhere? Or does this just die after the chat's over? I'm going to post it in the YouTube comments because I think in the YouTube comments it doesn't die. I don't know if I just want to post my email. Peter, come back next week. We'll try to answer if you can. I'm too exhausted here. I got to get out. I got to get out of here.
All right. Goodbye, everyone. Good luck, George, this week with everything you got going on.
All right. Bye-bye. Thank you.
Bye.